Let's start with sugar futures first, which have risen today on expectation that the government would lift some curbs on the tightly regulated industry either today or tomorrow. The federal cabinet is expected to take a decision on the reform issue later today or on Thursday. India is likely to churn out 24.6 million tons of sugar in 2012-13, an industry body has said, against an annual demand of about 22 million tons. The prices had been falling for many sessions now, but last couple of days have seen some strength. Today as well, nearly 0.5% of a gain upcoming on your screens. Let's get in then. Praful Vitlani, he is proprietor Jagjeevanji Kesavji and Company, and he joins us on a Mumbai phone line. Mr. Vitlani, hi, welcome to the show. Do you think some result could be coming today or Thursday, or there is a chance of a deferment coming in again?
Yeah, it looks like that on Thursday there could be some result here or there. And this 0.5% or market which has just gained now. This is on the account of there is likely to be excise duty up by say around 130 rupees per quintal, which comes to almost 4%. So in case 4% excise duties goes up, so whatever sugar they have, which is already lifted from the sugar factory, so that small temporary gain is likely to be there in sugar under anticipations of excise duties put by 4% by central government to compromise with this removal of 10% procurement from industry at lower price, which they are currently buying at 1900, which state government will have to buy at 3000 rupees, that 11 rupees per kg, which is coming 1100 rupees per quintal. So from where the money will come? So that money will come from excise duty increment. This is what anticipations is of the trade, and because of that this part has come.
Sure. It has seen a very strong run-up today in the market. Of course, as you pointed out, this is something that the industry is working out with. Apart from that, are you looking at further gains coming in for sugar prices now?
Yes, in case on day after tomorrow's meeting, if this goes to 4%, say today around in last 2-3 days, 1% has gained. So another 3% gain could be there till the effectual date of excise duty. Means if it is effectual from say 16th of April, then till we can say 15th of April, market will be good only. If it is 1st of May, then till 30th April, market will be better.
So what range are you working with now for sugar for this quarter?
As far as this quarter is concerned, one can M30 see sometimes this whatever rate. Now I will speak according to the NCDX base, because last few of the interviews I have spoken ex-mill without excise duty, and that was a misunderstanding in the trades actually. So M30 we can say 20 and 2800 without excise duty on ex-mill basis. So 2900 according to current excise duty. So this we are putting as a stop loss, 2900 M30. And we are looking at around 3100 price for the sugar.
All right, so a limited downside, but much of an upside is expected by the industry. Mr. Vitlani, thank you so much for joining us. Well, that's about the sugar prices, but chana prices also have gained today on value buying, supported by hopes of a pickup in local demand ahead of the wedding season, offsetting rising supplies from the new season crop. The chana futures continue to surge on good buying support. Fresh buying at the spot markets for the upcoming wedding season also has lended support into the prices. The wedding season in India starts from April and continues till June, and India has further extended a ban on export of pulses by a year to March 2014 to bolster supplies at home and to keep a lid on local prices, a government support statement said today. Let's talk about the soybean prices, where there has been a rebound today on back of strong international prices. The strength in Malaysian palm oil prices has given support to soybean and soy oil, both of that. 2.5% of gains on soybean on your screens there. Let's get in the need of this eye at Nickel Inc., and he joins us on an Indore phone line with the industry perspective on the prices right now. Neerav, hi, welcome. After those, it's been a very choppy week, month, if as to add there, but today's gain, how are you looking at that, and do you think it's more sustainable from here on?
See, basically, Manisha, there are two things in the market. Yesterday's fall was overdone because of the financial situation in Europe, but I think market made a right rebound. And the other thing is the Indian soybean S&D is different from the world S&D, where the Argentinian soybeans and meal are lining up for shipping out. And maybe by the month of June, all the destinations will start having South American cargoes. So we have two factors which are really helping the soybeans in India. One is Iran, which has a lot of sanctions from America. So only because of certain Indian government's regulations where they are doing a barter trade through some banks, that Iran is able to buy from India, and that's paying about $10 to $15 higher prices on soya meal. And second, the nearby coverage of the destination, because the South American shipping out has been slightly delayed, and it takes about a month and a half time to finally reach the destination.
Sure. So going forward, what's your sense now, Nirav? How much of a movement would you see in the prices?
I think the market will hold at 36.50 will be a good support for the market, and I think it can slowly trade up to 37.50, maybe 3800.
Okay.
But I don't see a very big rise above 37.50, 3800.
Okay.
Market seems to be in this range. But one more thing I would like to add is this year soybean has been very tricky because of the farmer not selling also. And just now the industry holds very less stock of beans. But on the contrary, farmers are holding higher stock. And I expect in July onwards, the farmer selling will come in, which will lead to a good fall in July, August, September period in India.
Your point is well taken, Nirav. Thank you so much for joining us with your sense on the edible oil space there. Vijay, before we talk about the agro commodities, the flashes which were just there like a 30-second bag, Cyprus minister resigning, what kind of an impact do you see of that coming into commodities?
Manisha, the deleveraging bias which I have been talking about is likely to accelerate. My guess is hedge funds, which are the largest players in the commodity markets worldwide, are likely to remain nervous and on tenterhooks, and therefore cut exposure in the markets. This will lead to a possible slow and steady decline in the markets rather than a big crash kind of a scenario. But the overhang of overhead supply will remain, and commodities are unlikely to gain significantly, barring any unforeseen circumstances. There will be a pressure, there will be an omnipresent feeling of heaviness on prices almost across the board.
All right, before we take that break, Vijay, what's your sense? Because you heard the industry perspective on edible oil and sugar as well. Which one are you picking?
Manisha, edible oils are a segment I've been bearish on. Come the summer, and my guess is both crude palm oil and soya oil are likely to be dragged down. The short-term blip up that you're seeing in today's trade is partly because of the rise in crude oil prices. As and when crude prices rise, crude palm oil basically starts to rise in tandem because of the blending aspect. And when crude palm oil goes up, refined soya oil also tends to move in tandem. I would be positive on sugar, which I have been for the last couple of weeks, and my guess is these current prices cannot be sustained by the industry, which is either selling at production cost or below production cost. And the gradual increase in fuel prices, especially diesel, are likely to impact the prices in the sugar futures, which are completely mispriced at this point in time by the markets. And the June future, if you were to get it at, say, about 1.5% or 2% lower, I think provides a good opportunity for a patient trader to make approximately a 125 to 170 rupee gain from there on.